when we look at the price of gold, gold itself is warning us that the world is more or less preparing. It's telling us something bad is happening, and we're just waiting for that piece of news or that event, that kind of shoe to drop to cause be the name for the next financial reset, which I think is coming sooner than later. But you definitely don't want to fight this trend, and gold is telling us something bad is brewing. But you can't bet and try and pick a top, because this market climbs a wall of worry, and it can keep doing that for a lot longer than most people can stay solvent.
Gold is flashing a powerful signal that the global financial system is preparing for its next reset. Prices have broken out of a long consolidation pattern, with strong momentum pushing them toward higher levels. Technical setups, including Fibonacci extensions, suggest upside targets in the range of $4,100 to $4,800, while short-term action indicates further gains are likely in the weeks ahead. Silver, meanwhile, is showing signs of catching up quickly, with the potential to test $49 to $50 an ounce before a healthy pause. Both metals are supported not only by strong chart structures, but also by economic fundamentals and seasonal tailwinds that tend to favor precious metals during late summer and early fall. ChrisVermeulen, a respected market strategist and founder of thetechnicaltraders.com, has long emphasized trend following and momentum analysis as essential tools for investors. His approach highlights how patterns, such as bull flags and seasonal cycles, can help traders capture powerful moves in gold, silver, and mining equities. The key takeaway here is that gold and silver are entering a high-probability phase of strength. Major miners are already near all-time highs, while juniors are lagging but setting up for future opportunities. Overall momentum favors holding or adding exposure to this sector. Investors who position carefully stand to benefit from both near-term rallies and long-term structural shifts. Now, we present the clips from ChrisVermeulen's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
We'll probably tie into that, but I pretty much everything right now is pointing to higher pricing, going north on the charts, and it's kind of exciting. A lot of people are waiting for the Fed to drop the hammer to see what's going to happen, and then see how the algos and the big funds react to it. But everything is looking pretty good at this point. There's a pretty clear chart pattern just using Fibonacci extension based on this low that we saw back in November 2024. We had the big rally up, we have the high, and then we have this pullback that we saw earlier this year in May. Using Fibonacci extension, we can get a gauge of where that momentum should carry the price of gold, which brings us to about 4,100, 4,800 or $80, somewhere in that range. And so gold is broken out of this big bull flag. It's starting to pick up speed, high momentum. So there's a lot of upside potential for gold here. And just looking at the short-term chart, there's some really nice momentum here. If we were to look at this from a swing trader's perspective, this rally up, this quick little hiccup back down to the 5-day moving average shows that potentially in 3 or 4 or 5 days in the next week, we could see gold run another about almost 5%, just based on this high momentum move, which would be very nice. And it would actually balance out the size of this big bull flag that has been forming all year. So we got this giant bull flag, which is you have a rally up, it creates a flagpole, and then you have the flag flagging sideways in the wind, which is a pause before it continues higher. So overall, when this breakout that we're having, the first kind of real resistance area, I think, could be right up here around that 3850 area. And that could happen literally, as you and I are speaking, like this week type of thing, or next week. I'm just looking at this most recent pattern. It's showing silver should run potentially in the next week or so to about 45 bucks an ounce. If we go and we look back at the monthly chart and look at the big picture of silver, silver has this tendency, which is what you just touched on, Kai, which is it can kind of be dormant. It can kind of lag for a little bit. Gold might take the lead, and maybe miners sometimes take the lead. And then suddenly silver will just like take off and play catch up at the last hour. I think that's likely what's going to happen here. I think silver all of a sudden is going to pop and take off. And I think we could actually see it hit $49, $50, maybe hit an all-time high in the next month or so before maybe we see a little bit of a pause and correction. And the stock market has a reset. So gold and silver and the miners are all looking very strong. Not only are the charts on multiple time frames pointing to higher pricing, but as you mentioned, kind of the fundamentals, the economics, are also in favor. We have a really good tailwind, which is why I like gold here and why we've taken an added position in it. And really, if we take a look at this added layer of gold seasonality, Kai, you can see August, September through almost the middle of October, gold has a natural tailwind. It naturally wants to go higher on average every year. So a lot of things are lining up, telling us that gold should just whiz its way higher. It should be pretty effortless. And that's the joys of riding a trend. A trend should feel somewhat effortless. If you're trading and everything's going against you, it means you're fighting probably an underlying trend in the opposite direction. Right now, all the trends, including fundamental data, is favoring gold. On a short-term basis, when we look at the 30-minute chart, we can see, silver miners got into an oversold condition and they have just screamed higher. We're long SILJ here with our short-term sector strategy. When you look at the monthly chart, silver miners are up here trading near close to all-time highs for this ETF, going back as far as it did. When we look at the GDX, which are the large cap gold stocks, it's very similar. It's trading right up near all-time highs, or actually at all-time highs pretty much, telling us that I think we've seen a good chunk, a majority of the move for miners temporarily. I do think they're going to go a little bit higher. But what's interesting is the juniors haven't really, like the gold juniors haven't really taken off. They've had a very nice run, but they're nowhere near the all-time highs. And I do feel like the juniors are eventually going to have a really good window. I do think they are going to have a bit of a pause and pull back along with everything else over the next, 6, 8, 12 months. If the stock market does stall out, I think we're going to see everything have a bit of a pause. And for gold, silver, and miners, it's going to create a bull flag pattern, more or less. Wherever this tops out, we'll eventually see miners put in a bull flag, a launch pad, before it takes that next big run and shoots higher. And I think GDXJ and like the junior and microcap gold stocks, when we get to that market environment, are going to be a really awesome play. But right now, money has been going into silver miners, into the large gold miners, and not quite as much into the juniors. But they're all pointing to higher pricing, and I think there's quite a bit of upside long-term down the road. And I think near-term, they're going to have an explosive move. Gold, silver miners should pop. But I do think after that pop in the next month, they're going to probably start to go sideways and build a big bull flag pattern for down the road for it to have another leg higher.
The dollar index is showing signs of attempting a bottom, though it has yet to confirm the move. Markets are already leaning into the belief that rate cuts are coming, and this is pressuring the dollar while driving bond prices higher. Traders are front-running the decision, speculating whether it will be a quarter or half-point cut. Regardless of the outcome, the setup feels familiar when viewed through the lens of market history. In 2007, the stock market was reaching new highs even as cracks were forming beneath the surface. Gold was quietly outperforming, and the dollar had been left for dead, one of the most hated assets at the time. The similarities to today are striking. Stocks are again frothy, led narrowly by the Magnificent Seven, while gold is surging. The dollar is once more considered worthless by many, yet such extreme sentiment often precedes reversals. Looking at longer cycles, precious metals tend to shine at the later stages of the stock market's advance. Capital goods are performing strongly. AI is fueling adaptation and growth, yet this feels like the final phase of the cycle. History suggests the stock market could top, gold may surge to new highs, and eventually, the dollar could rebound sharply as equities unravel. The alignment of bonds, the dollar, and precious metals is sending a signal investors should not ignore. Let's get back to the interview.
Yeah, the dollar index is trying to figure out if it's putting in a bottom here. It looks like a bottoming type of pattern, but it has not bottomed yet. More or less, it's kind of, I think a lot of people are thinking, there's going to be a rate cut, which could make the dollar lose some value. So that's kind of what we're starting to see. Is that I think that is the belief, is there's going to be a rate cut. Usually the dollar is going to want to pull back. And if there's a rate cut, we're also probably going to see like bonds move higher. And if we take a look at bonds like TLT, you can see the last 4 days, bonds are just shooting higher. Everyone seems to be moving in, believing there's going to be a rate cut. And there could be. The question is it zero? Is it a quarter? Or is it half? We're just going to find out. But people are front running the news and trying to get positioned in for it. Of course, the news is going to hit. We'll probably see a pullback. But the dollar, people are betting on a rate cut, higher bond pricing, and they're expecting the dollar to fall, which will be interesting to see because, if we go back and we look at this chart, there's a comparison chart. The left one here, I'm going to go back to 2007 to the stock market high. We just go back here and I'll just zoom way in. So if we go back, the candlestick chart here, Kai, is the S&P 500 weekly chart. The S&P 500 was hitting new all-time highs just before it put in a major top and started to crash. Now, the yellow line is gold. And you can see we're in a very similar type of situation. We had a big pullback this year. We had a rally. We're pushing to new highs with stocks. 2007, we had a sharp pullback, and then we've had a rally, and we're pushing to new highs. Well, gold for both of these time frames are like the top performers long term. They are picking up the slack. Gold is performing very well. And what's really interesting, if we go back to this time window, on 2007, on the left chart there, we look at the Dixie, the dollar. It had sold off. It was one of the most hated currencies. Everybody says it's going to be worthless, blah, 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 all of that stuff. And then we come over here to where we are now on this other chart. If I get this to load here, and we take a look at the dollar index. Dollar index is back down at the bottom. It's one of the most hated currencies. Everybody says it's going to zero. So we have a very similar setup. Erase all the news, the Fed, the economic environment, and just focus on price action. We have a very similar setup. Stocks are frothy. They're being dragged up by the Magnificent Seven, so it's not a healthy rally. Gold's outperforming everything else. The dollar's the most hated. And, the markets really do move for the same reasons, no matter if it's a tech bubble, if it's a financial crisis like 2007 or whatever this new one's going to be here now. They sell off because people are scared and something bad is happening, or they rally because they're bullish and confident. So we have a very similar setup where we've seen before. We're seeing gold, silver, and miners come to life and outperform. This is what happens just before a major trend reversal. In fact, if we look at just the cycles in the market, usually precious metals do exceptionally well right near the top. We saw this in 2007 as well. And so this is an early warning sign. Industrial capital goods have been doing very well also. And it's interesting because when you come down and look at this business economic cycle, which I don't think I've shared with you on here before, but more or less we're in this this yellow cycle here, Kai, is the economic cycle, the business cycle. The blue one in the background is the stock market cycle. And again, the stock market cycle is saying precious metals are telling us something bad is happening. The stock market is likely to start to top out soon. This yellow cycle is the economic cycle. And if you look where we are right here, innovation and adaptation, we've got in the same time frame, this is AI. This is adaptation. Everybody's bringing in AI into all the businesses. It's spurring on tons of growth. It's dragging the stock indices up by the Magnificent Seven. And so we're just in this final phase. The economy is still growing and still has some strength, but the stock market already knows the end is coming. The music's about to stop. And it's having a game plan, being able to identify when has that music stopped, when do you need to change, pull chips off the table, or change your strategy or hedge your positions. So there's all this kind of interesting stuff coming into play, like the dollar and like 2007 and these cycles. I find it all really interesting. These are big cycles. These have to do with the whole kind of global economy. So they don't happen overnight. They take months, quarters, in some cases, years to actually top or bottom. But we're in the process. I believe we're on the homeward stretch to potentially, if we fast forward from 2007 and we just look at the price action, this is where gold shot up another 30%. The stock market fell 55%. And as the stock market tumbled, the US dollar took off. And so I believe we could see something similar potentially down the road. Stock market sells off. Gold has its final blow-off move to 4,100, 4,500 an ounce. Silver, I think, is going to hit 50 an ounce. The dollar is going to put in a bottom and start to rally as the stock market crashes. There's a lot of stuff coming to play. I probably just lost everybody, but there's a lot of really interesting things coming to play, which kind of just you need to be aware of.
The signals emerging across global markets are pointing toward an environment of significant transition. What we're witnessing is not a series of isolated moves, but the early stages of a broader capital rotation. Precious metals are asserting strength at the exact moment when equities show signs of exhaustion, while the dollar index tests critical levels that historically mark turning points. Bonds, too, are flashing signals as investors price in the probability of monetary easing. Taken together, these aren't random market fluctuations. They're evidence of a system preparing for change. In every major cycle, markets tend to follow familiar behavioral patterns. Investors chase performance in equities until valuations detach from fundamentals, capital begins to rotate into defensive assets, and the lagging signals, often overlooked, become the most important. Gold and silver outperform not because of hype, but because they serve as real stores of value when confidence in paper assets begins to erode. The same conditions we've seen in past tops are unfolding again, and while timing remains uncertain, the structural setup is remarkably consistent. We are standing at a critical junction. Policy shifts, liquidity injections, and investor sentiment will dictate how sharp or prolonged the next move becomes. But the trend is clear. The market is transitioning out of its late cycle phase, and those who recognize the warning signs can position accordingly. History shows that ignoring these signals has costly consequences, while adapting early can preserve and even multiply wealth. For investors, the path forward requires discipline and clarity. The same forces driving speculative growth today can trigger defensive surges tomorrow. The key lies in seeing the bigger picture rather than getting lost in the noise of daily headlines. Cycles like these do not happen often, and when they do, they reshape the financial landscape for years to come. That's why staying informed, prepared, and strategic is essential. If you found value in this analysis, make sure to like this video, subscribe to the channel, and share your thoughts in the comments below. Your feedback not only supports the work here, but also helps expand the conversation about where the global economy is really headed.